Good afternoon, guys. Welcome to another episode of CEO Hour. And I'm super excited to have today my business partner and friend and brother at this point, Joan Chica. So, Joan, welcome to the show.
Thank you so much for having me. Definitely looking up to the time that I could be here. Lots of great value that you're delivering to your agents, and you have so many great ideas. This is awesome. I love that you're kicking this project.
Means a lot, man. Thank you. So, Joan, so today we'll be talking about profitability. And like as we both know, we're entering a shifting market. There's so many things that we could be doing differently to make more money if only we knew what those things were. So anytime we get at a time like this, we go ahead and we start talking about profits. Well, we're always talking about profits, but now more than ever, profit really matters. Uh, why? Like, why would you go ahead and look at your profit number?
Because essentially, all of our real estate agents have a business, right? And as a business, you're not going to work for free. You want to make sure that you are covering your expenses and that you're creating wealth through that business. Most importantly, so that you can have passive income, right? With the wealth that we create, we can go and invest in other tools and venues to create passive income and eventually retire from the business. So especially in the shifting market, it's really important, very, very important to keep an eye out on not only what money is coming in, but also what money is leaving, because ultimately what stays is what makes us profitable, right? And now more than ever, when we have inflation, costs are going up. When we have houses that the houses prices are going down, then we're going to have to work that much harder to keep and sustain that profitability. And that's what's really important to look at these numbers.
Yeah, I get it. And one of the things that I really like that you said is cover the expenses, and beyond that, we all want to live a bigger life. How about retirement? How about investments? Like how much fun your life could get if you could have all these things. Now, I wanted to just parentheses and introduce this idea. You tell me if you agree with it or not. I feel that at some point, and I don't know why this even happened, but at some point, the word volume, sales volume, hijacked the importance of profits. And there's many agents that are making a bunch of money. They're selling a lot of millions of dollars in volume. They're getting recognition, they're getting their awards, yet their business is not profitable, or their profit margin is like between 1% and 5%.
Yeah, it's actually very interesting that you mentioned that, because towards the beginning of the year, I met with two very top producing agents here in our office. And it was very interesting because they were in the same room. We had a mastermind, and one of them had roughly half the volume of the other one. However, when you look at net profits, the one with half the volume earned more and kept more than the one that had double the volume. So it's really mind-blowing, the fact that many agents are focusing on, I closed $20 million in 2022, or I closed $30 million in 2021. Great, but how much of that translated into money in your pocket? How much of that money in your pocket went towards investments? Did you get a new investment home? Did you buy another business? What did you do with that, right? And now, where we are seeing a market that is getting more competitive in the sense of sellers being more picky as to who they go with, and oftentimes basing their decision on who's going to give them the lowest split, it's very important to deviate from focusing on closed volume and really focus on revenue and gross and net income as well. Because you might have sold a house for $1 million and that looks amazing, but you might have only retained 1% off of that transaction, while the other person who sold $900,000 got to retain 2 or 3 or even 4% of that transaction, which meant more money for that person, right? More value to that agent. So that's really why it's very important to focus on profits. And I'm not saying volume is not a good thing, right? That's a great marketing platform for many people to say huge numbers attracts more business. But especially in this market and in the shift that we're headed to, it's more important to keep units, to keep the same amount of units that you're coming with, because as the market shrinks, if you're still selling the same amount of units, like let's say you did 20 units in 2022, the market shifted in 2023, you kept those 20 units, even though the market went down, you remained steady, you actually grew in market share and you built a fort around your profits because you're still getting the same amount of money in.
That's interesting. So you said to deviate my focus from vol, like not deviate it completely, but just take it with a grain of salt and focus on the units that I'm actually selling, right? Okay, and
Well,
I'm assuming that it's directly correlated with market share. The more units I have, the more market share I get, right?
Correct, absolutely. So for example, and again, I'm just making up numbers. In 2021, we sold 1,000 units, right? If in 2023, we're going to sell 800 units, but you still sold the same 20, your percentage of those 800s went up, right? In 2022, you might have sold 20% of the units out there, but because you remain constant and the market shifted and shrunk, then that 20% of 800 becomes much more higher, right? And you're going to be having more percentage of that market share. But I just want to digress a little because yes, we need to deviate our entire focus in closed volumes. But what I'm saying is not necessarily move it from volumes and move it to units, because that's not true either. The same can happen in units. You might have sold the same 20 units, but if you're selling them at a lower price point, or if you're selling them at a lower split, you're not making money. So it's really understanding that everything is tied together, right? Nothing is black and white. Everything has an impact on everything else. So you have to take the three numbers, the three main numbers collectively: closed units, closed volume, and net profit. They all have to be aligned, and you want to maintain them and keep them balanced as you move into a new shifting market.
You know what? I think you're the first person that actually mentions having the three combined at the same time. And I feel that's pretty smart, because either people focus on volume or units, yet you mentioned the commission part of it. And we know for a fact that, price is only an issue in the absence of value. And agents who cannot demonstrate value will settle for a lesser commission. So if a top producing agent is able to increase their value, charge what they're worth, and through that, providing such a great service that they sell more units, then therefore more volume, they'll make more money.
100%. It's all right now. It's all about the value that you're providing them. But here's the caveat though, because I think in one of your episodes recently, you also mentioned that we're moving from a service-based market into a market based entirely on statistics. Yeah, skills-based market, correct. So yeah, service is very important, right? As you're doing the transaction, you want to make sure that they are a repeat customer. But for you to get into the door, you need to have the market share. You need to have the statistics that prove and back up your business, right? And that's where units and volume and market share really thrives, and it's very important in. But at the same time, you need to make sure that you as an agent are profitable and can still sustain the high rent prices that we have right now, the high grocery prices that we have right now. And that's where the profit really has to come.
And I honestly, what I heard you say is skills pay the bills, right?
Yeah.
Like the more skilled I am as a real estate agent, which at the end, we can talk about numbers and profits all we want, yet if we don't have the skills to get the clients, we'll never get them. Right?
Correct.
So I love the fact you're also acknowledging that part. Now let's get into the numbers, right? Now it gets pretty complicated, and agents, I mean, for the most part, at least myself, right? I'm not great at math. And whenever people used to show me an income statement or a balance sheet, I would be so confused I would get out of the room. The only calculation I can do is anything times 3%. That's all I know, right? Yet through time and through exposure to this conversation, I love it now, right? And now it's part of myself. So what numbers, should real estate agents look at?
Well, absolutely look at your closed volume, look at your units, and look at your profit. But again, at Keller Williams, we deliver the message that you have to start with net profit first. We always start with profits and then we work ourselves backwards. So some of the conversations that I have with our agents when we look at their P&Ls and their goals for next year, we always start with how much do you want to pocket next year, right? How much do you want to make? How much do you want your business to produce for you next year? Once we have that number, we work our way backwards. Yes, the math can be very overwhelming, but it's very simple. If you have $100,000 as your net profit, all you want to do is divide that by 30%.
Okay.
I'm sorry, no, not by 30, by 40%. You want to divide that by 40%. Why? Because we preach the idea that your gross income, so everything that you bring in and produce, 40% of that should become your profit.
Okay, so that's $250,000.
Correct. So if you want to net, right, keep in your pocket $100,000, then your goal for that year should be $250,000 in commission, right? In commission that comes in. This is prior to any splits with your company, prior to any referrals. That's how much you want to bring. Once you have that number, then we can look at how much is the maximum you can spend. I'm not giving you this number as a target. You shouldn't spend this at least. No, this is your maximum expenditure, right? So you're going to take 30% of that $250,000. You're going to multiply that by 30%, and that should be the maximum amount that you spend in your business for expenses. So there's a division there. You have expenses, and then you have cost of sales. Cost of sales meaning anything that comes along with the sale. If you sell, you have to pay that cost. If you don't sell, you don't pay it. We're talking about fixed expenses, right? These are expenses that will happen no matter if you're selling or not. So after you have that $250,000 number, you're going to multiply by 30%, and that should be your maximum fixed expense category for that whole year.
So you're telling me that 30% is my budget for that category?
Correct.
Okay, so 100%. In this case, it's $75,000. It's the maximum I can spend on operating expenses, right?
Absolutely. Thank you. That's the word that I was looking for, operating expenses. So $75,000. Now, what goes in that? Any admins that you have, right? Salaries they have to pay for admins, any marketing that you have, any rents, any fees, any memberships, all that kind of stuff goes into that bucket. And again, I just really want to emphasize that's your maximum. The reality is when I do these numbers with our agents, I have yet to find one single agent that works with Keller Williams here at Woodcliff Lake that spends more than 30% of their net. I'm sorry, more of their 30% of their gross. I have not seen anybody. Roughly, they're in the 20s, in the 25%, really around 18% of their gross is what they're spending on fixed expenses.
So on that same category, would you also allocate lead generation efforts? If a person pays for subscriptions, all these things will go there too, MLS fees.
Absolutely. All of that would go there. Any expense, and this is the key formula here. If the expense happens, regardless of you selling a home, it goes in that category. If the expense only happens because you sold a home, then it's a cost of sale, and that's a totally different bucket.
Gotcha.
Okay.
Now,
yeah, go ahead.
Quick parenthesis, because I get asked this question a lot. On the operational expenses, none of this have to do with personal expenses, correct?
Not at all. Your business entity and your personal entity are two separate figures, two completely separate figures. And that's the reason why when I meet with brand new agents, the first thing we do is we have to make sure they have separate bank accounts. You have to have a separate bank account for your personal life and a separate bank account for your business. Why? Because first of all, your CPA, when you do taxes, is going to love you. Everything is going to be centralized in one area, right? And then second, because it's going to help you determine whether or not you're being profitable. Let's say a year from now, you look at your business and you realize that you're having to draw money from your personal savings account into your business account. That is a red flag telling you you're not profitable. Because the cycle shouldn't be from personal savings into business savings. It should be from business checkings account into your personal life. If it's the inverse, you're losing money. You're not being profitable. You should get out of that business or do something to change the flow of money.
Okay, got it. Oh, that's great, by the way. And I agree 100% with the fact of having a separate bank account. And guys, talk to your CPA. If you need to open an LLC or a corporation, there's some tax benefits associated with it. Make sure you talk to them. We're not giving you, parentheses, legal. We are not giving you any legal advice. We're not CPA, so we're not giving you any accounting advice either. This is just for informational purposes and best practices from our agents. Now, Joanne, just keep going. Sorry, I had to add that disclaimer there.
I love it. We always have to say that. But yeah, absolutely. Your finances are personal. You need your own person who is aware of your situation to give you advice on this. This is just generalization of a good way of running a real estate business. So if we go backwards, right, we said that 40% of that gross should be your net profit, 30% of that gross should be your operating expenses. Now, what happens to the other 30%? The other 30% is cost of sales. These are expenses that are incurred. These are expenses that you have to pay if you sell. Only and when you sell, you have to pay these things. Here's where I make very clear the value of Keller Williams. At Keller Williams, one of them, right? Because we have multiple values here. But the one of the components at Keller Williams is we cap you. So Josue, you said that it was $75,000, 30% of 250, correct?
Mm-hmm.
At Keller Williams, will an agent ever get to pay $75,000 in their cap and royalty?
There's no way. The system won't allow us.
There's no way. There is no way that you will ever pay that much, right? So if you know your cap, you can go ahead and subtract that from $75,000 because that's a cost of sale. It only happens when you're making a sale, right? The rest, you can use to pay referrals. You can use to pay buyer's agents. You can use to pay listings agents. You can use to pay an inside sales representative who gets paid on commission, right? Something else that we try to get our agents to think about is do not increase your fixed expenses. Go ahead and increase your cost of sales because those are dependent on whether or not you sell. So if you're not selling anything, you're not paying, right? Mm-hmm. So instead of giving a salary raise to an inside sales agent, tie them to profit, tie them to revenue, tie them to commissions, because if you win, they win, right? It kind of makes that happen. So that's the other 30%. And in reality, again, when I meet with agents, less than half of that, maybe a maximum of $30,000 or $35,000 goes to that category of fixed of cost of sales. The rest becomes net profit and it goes to the bottom line. Now you might ask yourself, what do we do when we have an excess, right? If my goal is $100,000 for the year, but then because my cost of sales are low, because my operating expenses are low, I'm going to have an excess, right? A bonus. Well, you have two things that you can do with that. You can invest it in passive income. You can take it out and pay yourself. Or the other thing that you could do, and that I tell our agents to do, is you can look into your business and figure out another source of revenue that you can invest into, right? Again, we're not CPAs and we're not doing tax advice, but think about this. If you're paying a percent of your net income as taxes, why not take that same amount and apply it towards your business? Ultimately, if you make $10,000 in revenue, let's hypothetically say the government is going to keep 40% of that, right? So $4,000 are going to go to pay taxes. Why? When you can just invest it into your business, right? Do a $10,000 expense into your business. And then the federal government kind of paid 40% of that cost, and you only invested 60% of that cost. And if you really, really stick to the MREA and what Gary Keller teaches us, that $10,000 should become $40,000, right? Because we always look at the return on investment to be 4-to-1 ratio. So for every dollar that you spend, you should anticipate $4 back.
Okay, let's put a pause right there because you said a lot of great things.
Oh, thanks.
Let's highlight this for a second, a couple of things. You said, before increasing your operating expenses, try to increase your cost of sale, right? The variable expenses. Let's say Joanne comes in, instead of me giving a raise of $20,000 a year, you get X percentage of gross commission income per month, correct?
Correct.
Got it. First thing. Second thing, and you know what I hear you say is almost like use the tax book, use the legal system on taxation on your favor. So understand how finances really work and increase your financial IQ through truly understanding the finances. So then you end up paying less taxes and growing your business faster because you invested on the right things.
Correct. So essentially you pay less taxes now so that in the future you pay more because you're going to make more money. Kind of.
Right. Or you can talk to your CPA and find a way of paying less, right?
Continuously find that,
yeah. And also you mentioned if you have a surplus of money, figure out an area that needs help in your business for leverage, or figure out other revenue streams that you could create within your business. Correct. I have a question for you. On all the consultations that you have with your top people, are any agents that get paid a salary? They pay themselves a salary through an entity like an LLC or something like that?
Yes, actually, that's a good point to mention because our top producing agents, the ones who really have a P&L set in line and they're very mindful of their income, they do have a set monthly salary. You are an employee of your business, right? You are an employee of your business. So every single month, based on your budget, you're going to pay yourself a minimum every single time. You're going to pay yourself a minimum every single time. And then at the end of the year, when you do your taxes and you look at your profits and all the other stuff, anything that remains, it can either remain in your business, it can be paid to you as a bonus, it could be an owner withdrawal, really depending on the tax legal entity that you have. But it's highly important to pay yourself a salary, because we all need to pay rent, we all need to pay mortgage, we all need to pay our groceries, and the business is your source of income for that.
Got it. Well, thank you. Thank you for that. All right. Now, numbers we've looked at. We looked at the profit margin. We looked at the operating expense and cost of sale. What comes after this?
Taxes. Taxes comes after that. So if you're doing the math right, and 40% of your gross income became your net income, the government is going to tax you on that net income. So the other thing that I have our agents do is I share with them a tracker or a spreadsheet, or we go into any other platform that helps you do accounting. And we look at every single transaction and we apply these percentages to every single transaction so that they know out of each check how much they should be setting aside to pay taxes. So again, this is very dependent on the person and your legal taxing entity. So let's say 25% or 30% of your net income has to go to taxes every year, then we know that 25 or 30% off of your 40% of every check should go to taxes. And then on April, when the government gives you a bill for how much you need to pay them, you withdraw from that account, you pay it, and any excess, you can treat it as a bonus. There you go. That was your holiday bonus for the year, because you did due diligence, you saved for taxes, you had the money there, you didn't have to scramble at the end to find money to pay. You ended up having a surplus, and that's a bonus for you.
Love it. Love it, man. This has been absolutely great. Now, after having these numbers, I mean, you mentioned a couple of times balance sheet. I talked about the income statement for a minute. What's that? What's a balance sheet and what's an income statement?
Great question. So an income statement really looks into your day-to-day operations for the business. So it looks at where the money is going, so all your expenses, where the money came from, because once you start running big businesses, you want to identify what part of your business is most profitable. So going back to that conversation we had at the beginning, where we had two agents in the same room, one of them with double the volume of the other, but the one with the lesser volume had more income, more net income than the one with the higher volume. When we looked at their P&Ls, we realized that that one of them was heavily reliant on buyers. Heavily reliant on buyers. The majority of the income for his business came in from buyer transactions. That gave us a great insight, because it means, can your business truly be sustainable into a shifting market when there are going to be less buyers and more sellers? Maybe not, right?
And I mean, and someone else was controlling their income, because the listing agent was the one defining how much they were going to earn.
Correct. Because usually, statistically, when you're a listing agent, you can expect anywhere between 3 to 4 transactions out of every home, right? The sale of that home, the purchase of the person who sold that home, and the buyer who bought that home, and then a referral probably in there from one of your open houses. So if you're purely focusing on the buy sides, you're kind of losing out on 3 other future businesses or future income streams. So anyway, so going back to this example, we identified that this person is highly reliant on buyers. And I remember that. So I coincidentally called him yesterday and I asked him, hey, how's your business going? I'm starting to see in the market a general decrease in buyers out there. Like, we're starting to see a bigger slowdown in contracts written versus listings taken. I know your business is heavily dependent on buyers. How are you doing? How are you preparing? And his answer was, yes, we're actually seeing less buyers, but we're starting to focus more on listings. And right now our business sees 20% income from listings versus 5 or 10 from last year. And they're focusing heavily on that, because the amount of buyers they had previously, now they're going back to them and nurturing them and really making sure that they retain the sphere of influence so that they can sell that or have more business from there.
That's another metric that is for the most part overlooked. You know, what percentage of your business is buyers and what percentage is sellers. Now,
Yeah. And that's
John,
something that a P&L would show you. And just to finish answering your question,
sure.
a balance sheet is more of a statement in time of your business. So if you were to sell your business today, how much liabilities do you have? Like how much do you owe other people, and how many assets, how much income you currently have, and that's what a balance sheet is. Most of the time, my conversations are more focused around a P&L because that's really your day-to-day operations of the business.
Gotcha. All right, perfect. Now, just one more thing, because I know, it's sometimes very difficult. Agents are in the field all the time, and we tend to not like numbers and even worse, tracking numbers. What's your suggestion for people who want to get started, but man, simply they cannot do it themselves?
That's a great question, and I've had a lot of agents who come to me and saying, "I don't have time for this." And my one reply to that is, when will you have time for that? Are you going to have time for it when you're no longer profitable? Are you going to have time for it when you can't pay your rent? Like which fear is higher? Not paying your mortgage and your rent, or sitting down month to month and looking at your numbers? So really that really helps a lot of them really understand the idea behind it. And ultimately, it helps you get a map of where you're going, right? You know the destination, but do you know the different points that you have to hit throughout the year to get to that destination?
And I think that's what I like the most, because you said we start with the end in mind. If you tell me you want to make $100,000 net profit, we just play it backwards.
Correct. Yeah. And if I have a conversation with you on January 1st, and I know that 15% of your business is not yet under contract, then we're going to have a conversation as to how are we going to adjust your numbers for the rest of the year, because you're not in track, right? If you know what the end is, you have benchmarks throughout the year to hit that end.
Just one more question, Joanne, because I know I'll get this one. You mentioned a model that yields $100,000. Okay. How about a person that is doing over $1 million in gross commission income, or $500,000 in gross commission income, or $10 million in gross commission income? Will this same model sustain all of their businesses?
It should. In reality, the MREA is based on somebody who brings $1 million in gross commission income. So $100,000 is only a quarter of that. And as I said earlier, many of our agents here don't even get to that 30% in operating expenses, don't even get to that 30% in cost of sales, right? These are just big numbers and oversimplification of the math, because we don't need to make it difficult. Just simplify it. If the millionaires are doing that and it works for them, it can be expanded or shrunk to whatever level. And as long as you're sticking to those ratios and those percentages, you're going to be profitable.
Love it, man. Love it. Brother, man, it was great to have you on the show today. I took so many notes. And you know what? Here's what I'm thinking. We should definitely host something together in person. We should definitely host an event for our people, to show them how to make more money. How do you think?
Absolutely. I love it. I'm a huge fan of the budget model and the economic model from the MREA. And we can definitely look into those topics and invite every single agent, Keller Williams or not, to join us, because financial freedom is the most important thing that I'm working towards. And I hope that everybody gets.
Definitely.
Can I ask a question? Sorry.
Hey, Yanni. Sure, absolutely.
Hey, John, thank you for coming. Appreciate it. I have a question. You mentioned to have a salary pay yourself first. You recommend to form an LLC formation for the real estate business that we're operating?
Well, that's something that you need to have a conversation with your CPA, because we all have different conditions in terms of taxes and personal life. But in general, we do recommend some kind of tax entity that will allow you to reap more benefits and deductions for taxes. But that's a conversation to have with your CPA.
That's a great response.
Yep. Thank you so much.
Awesome, Yanni. Thank you so much. All right. There's no further questions. Brother, I'll see you soon. Have a great day today. And guys, enjoy your week. Keep rocking it.
Thank you.
Thank you, Josue. Thank you. Bye.